What is going on, everybody? Louie T here, and it's Tuesday. You know what that means. We are back with another crypto market update. Today, doing something a little different. I got a special guest for you guys, someone who at this point could call him a friend, right? We talk a lot about markets, what we're seeing in the markets. We go, back and forth, sending charts to each other, and that is Mr. Spread. He is an OG in the space, big following on X. His handle will be down below. Go check out his X profile if you don't follow him already. Mr. Spread, what's going on, my man? Happy to have you on.
GM brother, GM Louie, and GM to all the biggest Bitcoin crew and community. Happy to be again here. Like you said, I'm no stranger to you guys and to your platform, to everything that you do. I think it's been almost 3 years now since I started joining your spaces. So I just want to say hello to all the guys there.
I know that, man. Before we get started, because honestly, I don't know too much about your background. We just connected and we just hit the ball rolling here. But
sure.
Tell me a little bit about kind of how you got into markets, right? How'd you get into markets? How'd you get into technical analysis, and then ultimately, being on X and being, a big name there, and ultimately, being a crypto investor and trader as well. Can you tell me a little about that?
Sure. So let me give you exactly the place where I started. I want to share something like a share screen. Before Twitter was something famous for financial analysis and sharing opinions about crypto, etc. The OGs had another forum. This is how old I am. You don't see my white hair, but this is the place I started on Forex Factory, and I was reading this forum of traders and news since 2010. And I was not creating an account. I was just watching these guys, posting their analysis, having the sub threads. And I was like, okay, these guys know what's up, right? So for about 2 years, I was just reading about it, and I just got my ropes, and I started learning about FX. And in 2012, I created my account, and I also started sharing my ideas. So all in all, I have been trading since 2012 professionally, I would say. My first 2 years were the years where I donated a lot of money to the markets, like everybody. I would say that those were my tuition fees. I was young, I was reckless. I was lucky in the beginning. I had like a small account. I grew it very fast, and in one night I just lost it all. So if anybody tells you that trading in the beginning is easy or people do not lose money, you should turn away and run as fast as you can. I don't know any trader, and I know a lot of traders around the world, some traders that trade in high numbers, that didn't blow up accounts. So my story is no different. I was, and I am still a usual guy. I'm a regular guy, but whenever I found trading, and it was, like I said, almost 15 years ago this October, I just fell in love with the charts, and I think I fell in love with the freedom. Started on Forex Factory, traded my way, and started managing my own book, traded around the world. I had been trading and training traders around the world until 2021. In 2021, after I bought my first Bitcoin in 2020, I decided to take a step back from the corporate world, and I started just trading my own book in FX and also on crypto. Since then, I also started posting on Twitter, and I don't know, naturally, slowly, I gained the following, found you guys, and after that, all it's history.
That's awesome, man. 2012. I was in high school. I was still in high school.
Oh my God! So I'm that old, right?
You're not that old. I'm feeling old now myself, but
I'm 30. I'm 38, by the way.
38. Okay, yeah. 30s are the new 40s. It's all. 30s are the new 20s. It's all good. They say the 30s are the prime.
That's true. I feel young enough to still have the energy and old enough to have the wisdom.
Exactly. Yeah, I know all about blowing up accounts. I've done that multiple times over, and like you said, there's no successful trader out there that hasn't done that. And if they said they haven't, they're likely lying or they're scamming you. So run far away. But yeah,
just read Market Wizards, and you'll see even those guys who are like the most successful traders in the history, even they admit that they lost multiple accounts until they made their millions.
That's that's kind of like you said, your tuition, right? It's kind of like the price you have to pay to really respect and understand markets and this game, which is investing and trading. And when you don't have that under your belt, eventually the market has a paddle for your butt. Like eventually the market's going to humble you if you don't humble yourself. But at the end of the day, kind of like forge and fire, right? The best traders out there learn from experience, doing well, making a lot of money, and then losing said money probably more than once, right? Probably more than once until it's either you come to an inflection point where you say, I quit, I'm not doing this anymore, or I have to change something. And you really hunker down and get disciplined with it. So I 100% agree. The amount of trading accounts I've ran up and ran back down to zero, I can count, on two hands probably. But still making mistakes, right? We still always make mistakes, but
100%.
yeah, I still know a lot about that. So that's awesome, man. And then being on X, I mean, you have a pretty large following. Were you like active during 2021, like during that bull run on X?
I think I started on X in 2021, but towards the end. I was just posting on Twitter. I was posting on Telegram because I'm from South Europe, right? So I was posting within a community on Telegram heavily. And someone said, hey, listen, why don't you post also on Twitter? I don't know. I didn't see the purpose at that time, but because it was a certain project, Telegram, I couldn't post about other projects, right? So I couldn't make analysis about other projects. I was analyzing the DXY, I was analyzing Euro Dollar, I was analyzing the S&P, and I was analyzing Bitcoin, Ethereum, and that project, right? So I was like doing daily analysis for them for free, just because I liked it and just because, I just felt to, give a little bit of help to the financial education in my country.
Yeah.
But people were like starving for more information and like general information for other projects, for other charts, etc. So I was like, you know what, fuck it, let me open the Twitter account. So I opened the Twitter account. I started posting the same things at first, both in Romanian, both in English, and after that I just flipped 100% to English when I started interacting with like much bigger accounts. Like I'm having some big accounts that we speak right now, and I was like, you know what, most likely I'm gonna do this for a long time. So I'm not just going to post in Romanian. It was a little bit confusing. So I just kept English. Most of the people who follow me also from the Romanian community, most of them speak English. So I was like, you know what, I'm just going to do it like that. So I joined your spaces. I joined other spaces. I started talking with other people. We started DMing, and one thing led to another. And here I am.
Here we are, right? Yeah. It's funny how it works, man. But yeah, that's awesome. 2021, I started investing in 2018 in crypto.
Wow.
And I was just one of those people just scouring the internet for whatever I could find, YouTube, X, or then Twitter, just for like guidance, trying to figure out what's going on. I didn't know much, right? And throughout that journey, deciding, I got to learn myself, right? Especially during that 2021, 2022 top. I felt I was too dependent on like other people in the markets to tell me what was going to happen. And that ultimately got me burned, right? I had a very successful, year, 2021. After DCAing crypto from 2018 through 2020, had an amazing run, and gave a lot back because I wasn't too knowledgeable, right? I understand at that point, I've been learning every day, understand a lot of the fundamentals in crypto. When you go down the rabbit hole of crypto, it's like Bitcoin. Then you learn about the dollar and how money works, and you kind of go down that rabbit hole. I knew all of that, but I didn't know a lot on the TA side. And eventually I just hit a breaking point where I was like, all right, I got to figure this out because I promised myself I would never be dependent on someone else out there to tell me what the market's going to do. And here we are today, 3-4 years later, I'm working in crypto almost full time now. So
congrats.
Love that. Thank you, man. Thank you. So, we're in an interesting point in the market, I'd say. We have equities at all-time highs, S&P, NASDAQ, the Dow Jones. We have the Russell, low-cap stocks, inching towards price discovery, if not already in price discovery. And we have crypto kind of dinking around.
I don't think this is the sorry to interrupt. I don't think this is the first time we see something like this.
Yeah,
I think it happened before, so
yeah, and
nothing to worry about.
I would agree. But what are you looking at? What are you seeing out there? Let's dive into the charts. Let's see what you're looking at. I kind of want to just see what your feel is on the market. What you're looking at for signal. And what are you trading? What are you looking at for opportunities right now? And you can just kind of go from there and just wherever it takes us, we go. So I'm going to bring up your screen here, and
Sure.
the floor is yours.
Thank you. So somewhere back in June, I noticed, and I'm just gonna delete everything from here. I noticed the fact that IWM was printing what was at that time a potential inverse head and shoulders, right? And because I trade StratFi, and I think this is part of my edge, I can say also that I'm lucky for the tuition that I paid there, and with the lessons that I learned from there, I came with the lesson learned, most of the lessons learned in crypto. Plus, I understood how markets work, because a lot of people who are in the crypto space, not lately, but at least back then in 2020, 2021, had no idea between the correlations of the TradFi markets with the crypto markets. Now, even more, since the introduction of the ETFs, I think that Bitcoin and Ethereum and the digital assets are way more correlated with the markets. Although lately we can see what's going on, right? We can see that, like you said, Dow Jones, Nasdaq, S&P, even Russell are at all-time high, and Bitcoin is kind of dicking around. But all in all, back then I realized, and I knew from past cycle and also from other phases of this market, that whenever we have IWM bottoming and printing somewhat of a potential bottoming sign, most likely if IWM would have rallied back then and since then, that was a leading indicator that altcoins will follow. And that's why I wanted to copy paste something, and I'm very happy to see that TradingView introduced again this feature. Let me stop the replay, because back then let's see when it was, exactly on the 2nd of June, I was writing this thread on IWM. So that was actually the bottom. That was actually the bottom of actually that was the breakout. We broke out higher, and since then the target that I had around 15%, 16% was touched, and more than that is the first time since 2021 when you have a new all-time high on IWM. So I think it's just a lagging phase, what we see now on Bitcoin, and a technical correction, a technical pullback. Because if we're going to look what happened with Total 3, with Ethereum, and also with altcoins, a few weeks after IWM was rallying, we can see clearly that we had a rally on Ethereum, and we know how explosive was that rally, and a rally in a lot of sectors and a lot of high caps, hyper liquid, whatever, even BNB recently. So this is what I'm watching. I have no worries regarding the market. I'm not stressed at all. Although I signaled also a correction on Bitcoin, which we're going to discuss about very soon. But when I see S&P 500, this is one of the trades that we took. And when I say S&P 500 breaking out, and this is actually called the runaway breakout, because instead of printing higher highs and higher lows, we can see that we didn't have a new higher low. Instead, the momentum was so strong that after this higher high, we just propelled higher. So for now, this market is printing, and it's already in a new all-time high, so it's in price discovery. Nasdaq the same, Dow just the same, IWM we just discussed, and like Jack is like to call me, I'm also watching other sectors of the United States markets, because I want to see early if any cracks would appear. And I'm watching the banking sector, because in this cycle, if you remember, when we had the Silicon Valley Bank collapse, the regional banks like Silicon Valley and First Republic were the first which were hit. So we had that drop in the KRE, which is the regional banks ETF. So I'm watching also the regional banks. I'm watching the big banks, and the big banks, for example, the big banks ETF in the United States, the 13 top banks in the United States and the ETF in which they are listed, it just made a new all-time high. And I'm watching the banking system because I see what the Fed is doing and how much they tightened their balance sheet, and how much, not how much, but what type of stress can come if we don't have this buffer. because and I know that you guys discuss this often with Donnie and with Prometheus and with Wabi, that we're in quantitative tightening and Federal Reserve is continuing, and they're very close to the bottom of the barrel. Until now, we had excess liquidity in the system. So I want to see if now, without this kind of buffer, or with this buffer very, very low, if the banking system shows any cracks. And as you can see, there are no cracks. Even in China, we have the Hang Seng Index printing new all-time highs. Not new all-time highs, but new highs. Nikkei is also at very elevated levels. Gold is rallying. Silver is rallying. So for me, all the correlations, because a lot of people are saying, that Bitcoin is very correlated to Nasdaq. Very good. So it means that it's just lagging. Or people are saying that Bitcoin is very correlated with gold. Very good. So gold is at all-time high. What do you think that Bitcoin is gonna do?
Yeah.
All in all, after I just cooked, and I'm gonna let you also continue from here, I have no worries when it comes to the short-term price action, even though we are in a correction right now on Bitcoin and altcoins.
Yeah, no, 100%. Seeing the Russell in, pretty much making new highs. Not something that was talked about much last cycle. At least I didn't see it, like you mentioned, but something that we were discussing a lot, especially back like in November of last year, because the Russell did rally to all-time highs end of last year, and got rejected hard, right? So, but the trap was, that the Russell rallying to all-time highs back then kind of lined up what we're used to seeing in these cycles. If you look at crypto or just markets in general cyclically, the timing of the Russell approaching all-time highs at that time was usually the time we see low caps and crypto kind of really start the bull run. And then obviously we saw all the tariff news and that pretty much postponed kind of what we were used to seeing and caught a lot of people off guard. But now, after that big tariff drop, a tariff scare, Russell back at all-time highs. So, and like I've been telling the Discord for a long time, I feel as if that this move for low cap stocks and crypto has been postponed, not canceled, right? And we're really seeing that come to life here with the Russell going into price discovery. So always good to see that. Also, you mentioned the bank stocks. We've been monitoring some bank stocks as well, and they look strong, right? They look like they're entering breakouts, like multi-high time frame breakouts. So what you're kind of saying is you're just going to keep an eye on the banks, and as long as the banking stocks continue to look strong,
JP Morgan, all-time high.
Yeah. So as long as these stocks remain to be strong, what you're saying, you're interpreting that, the music's still playing.
100%. I would be really worried, or would start to signal some red flags if I would see weakness in the banking system, because this weakness on a backdrop of low balance sheet from the Federal Reserve can have fast impacts, like negative impacts around the markets, because we don't have that liquidity buffer anymore. And that's why I'm thinking that very soon we're going to see from Federal Reserve some type of QE, not QE, or some type of stealth QE. And I think that they're going to do it through the treasury market. So this time, instead of, just inflating like usual QE, because I think a lot of people use QE very lightly. QE was introduced as a countermeasure after 2008, Lehman Brothers fell, right? So after that, they introduced QE, so they started quantitative easing, and they did it after COVID as well. QE does not start without some major crash before. So for people who are cheering for QE, they were cheering nonsense. You cheer for a crash, like a major crash first, like a huge crash that would not leave Federal Reserve any other option than to really start the quantitative easing. And I don't think this is the part of the cycle right now. We were still in QT. And two functions, I think, are going to happen. Federal Reserve is going to start along with the Treasury, some type of, like I said, QE, not QE, like some type of stealth QE to rebuild somehow the liquidity buffer in the markets. And second, they're going to cut the rates. And when they're going to cut the rates, the whole credit cycle is going to get looser. We're going to have a more elastic credit cycle. People are going to borrow more. They're going to mortgage, remortgage. The whole cycle is going to get looser until something eventually further down the line is going to crack. But I don't see anything from all the indicators, like the macroeconomic indicators that I'm watching. Nothing signals red, at least not now. I'm also watching Bank of America high yield spreads, and investors are willing to take on a lot of risk. We are at very, very low levels. So there is nothing currently that is signaling to me that we are on a brink of something bad happening. And on top of that, if you allow me just a few more minutes, for the first time since 2008, we have something extremely important. I shared this chart in March when I said, I think I was among the first ones which said that we might see a dollar bear market, a DXY bear market. So for the people who may not know, the DXY is a basket composed of other currencies, major currencies, weighted against the dollar, right? And the euro from that basket has 57.6%. So it has the biggest weight from the DXY basket. Euro has been in a downtrend versus the dollar since 2008. And in February this year, it was the first time when it printed the higher low on the monthly. And in April this year was the first time when we had a new high. So we're changing a structure, or we changed the structure after 6,300 days. And I think a lot of people do not understand the
magnitude
and the huge global shifts that might happen. A lot of people are still trapped in the PTSD mindset. A lot of people cannot believe that even the dollar can go into a bear market. So if the biggest currency, or the currency with the most weight from the DXY, will flip a downtrend which lasts for 6,000 days, this new trend that is developing will not last for 100 or 200 days. It has the potential to last for 2, 3, 4, 5 years. So this can last until 2030, 2032. Of course, it's not going to be a straight line. Okay, so we're going to have some periods when the dollar is going to bounce for 6, 8 months, when that might be the bear market for equities, for Bitcoin. But what I wanted to point out is that currently we have a huge break. And this huge break on the euro dollar to the upside might signal this huge break on the DXY to the downside. And if this is happening, we can see, like Jackie's very well said, throughout 2023, 2024, the decade of commodities. So we can see gold continue to rally, silver continue to rally, at some point maybe oil rallying next year, and also digital assets. A lot of people do not believe, or I really think they forgot how a real melt-up looks like a real parabola. What we had and what we have right now on S&P 500, it's a very clean structure. Like if I remove all my drawings, it was a very clean structure. This looks like a very clean structure. This drop was like COVID, after the COVID drop. And we are just only 10% higher than we were in February. I still think that this market has legs on the backdrop of DXY looking so weak, with the euro dollar changing like a huge structure after so much time. So last point here, if DXY is going to lose 96 area on monthly, it's going to open 90, 88. And I think maybe this quarter, maybe beginning of next year, once DXY loses this area, this is going to be the euphoria stage of the market that we're going to see in crypto markets as well.
Yeah, 100%. Yeah, dollars is something I was talking about, the dollar being potentially topped. End of last year, early this year, the dollar did top and has been falling ever since. Where I kind of got it wrong was I thought it was going to be an immediate reaction out of the higher beta assets. And I also didn't zoom out enough, right? Kind of where we are now in the dollar was like where I was thinking we could come. I was kind of comparing this drop on the dollar to what we saw in like 2017. But the way we're kind of looking now, it is looking more like we're going to see a way bigger drop. And if you can compare it to anything, it's kind of in the early 2000s, right? I don't know if you've looked at this, but like the last time we had a multi-year bear market in the dollar was pretty much coming out of the .com boom, where, from 2000 to 2008, We had a multi-year rally out of, we had the dot-com bubble pop, everything kind of reset. And then whatever companies survived, went on an 3, 4, 5, 6, 7-year rally leading into 2008. So is that kind of what you're referring to here that we could be possibly seeing?
It's very possible. It's very possible.
Yeah.
And also, like here, we had some periods of a bear market, even since 2002 to 2008. We still had some periods of downturns, like multi months, right? 6-8 months when we had some drops in S&P 500, Dow Jones, Nasdaq. So, like I said, for me, this is the line in the sand. I have the Twitter post in which under 105 for me was the go, and under 101 was a clear drop towards 95, 96 area. Now I'm just waiting because this is a confluence of supports, like the intersection between the huge downtrend, huge trend line and the yearly support. So once, or if this is lost, for me, is going to open to the next area, like 98, 88 level, and why not even 83 until like next year's. So with that happening, I feel very, very optimistic about the future. Of course, there are a lot of confirmations that need to come, but going forward, without a major stock market crash or without some big systemic risks happening around the world, without some wars, hopefully not, like some big geopolitical risks, any type of bear market that we might have, even on crypto, I think is going to be shallower than before in terms of percentage, when it got at least Bitcoin and high caps, and also time wise.
Yeah. So not a move away from, like, we're never going to be a bear market again. If someone says something like that, you run as far away as you can, but not as extreme, right? So
yes,
Bitcoin and altcoins very, very have been following a very cyclical format. Bull market, post-halving bull run, like a year and a half of bull run, followed by another year and a half of bear market, 70, 80, 90% drawdowns across the board, another year-long reaccumulation, and then heading into that next cycle. What you're saying is, yes, we're gonna have pullbacks, we're gonna have consolidations, even mini bear markets, but we're not gonna see that extreme 70, 80, 90% drawdown, multi-year type of cyclicality.
Correct. I also spoke to Jackie's and we exchanged some messages about this. All the models work until they don't work. There is no such thing as a perfect model. And I also think that this will apply to the 4-year cycle. At some point in time, I don't know if it's going to be this cycle, I don't know if it's going to be in between this cycle and the next cycle, but at some point in time, especially with the ETFs being introduced, especially with the way the new treasury companies are being introduced, I really think that the next bear market in crypto is going to be shallower for Bitcoin, not for all the altcoins, for some of the altcoins. And like I said, I don't think it's going to last that long. So this whole 4-year cycle at some point in time is going to stop, and we're going to have bear markets and bull runs like we're having right now in traditional finance. Yeah, because of the ETFs introducing.
Right. Yeah. So with the ETFs for Bitcoin, now Ethereum, these treasury companies, it's pretty much like crypto. The asset class as a whole is kind of maturing into more of a equity type asset class, where you do see most of the time, stocks go up, right? And you do get drawdowns, you do get periods of time where markets come down, but kind of maturing, and with those passive bids from equities, being with having ETFs, way less of a different structure from the cyclicality we've been seeing. Because if you're looking at the cyclicality, from a 4-year cycle standpoint, Bitcoin's top should be in right around now.
Very soon. If this is not the top, this should be the top very soon. Yeah.
Yes, but what's telling me that it's not is we haven't seen the fall. Sure, we've seen ETH move a little bit. ETH not being in price discovery. We have altcoins that have been putting in multi-year accumulations, and usually that's you see ETH altcoins run to kind of finish this so-called cyclicality. So with all that being said, now we just have the Russell breaking out in price discovery. That tells me, very, very similar to what you're saying, that we got time to go and room to run. And it's something that many people may not be able to fathom. Like, they don't, like, what do you mean? Like, equity's been in bull market for 2 years, Bitcoin is 100 plus 200% off the lows. Like they can't fathom that kind of long-term multi-year melt up. But it's very possible. It's very real. And it's like something we saw in 2000s where the 2000s coming out of that, it was a lot of internet companies, right? Doing super well. This go around, in my opinion, it's going to be crypto and AI, and it's going to be pretty much, history doesn't repeat itself. It often rhymes, right? But instead of being the Googles, the Amazons, it's going to be, the Ethereums, the Nvidias, the Bitcoin, and whatever top 10, top 15 altcoin you want to talk about. Yeah, no, I totally agree. I think we have room to run. I think people are kind of putting themselves in a box and not really opening up the idea to what's possible. And again, the model works until it doesn't. Right now, the model is skewing, right? We're skewing that model. We're seeing different type of, momentum in these markets we're not used to seeing. So I agree. I think we got room to run. I think Bitcoin's got a lot of juice left in the tank. And altcoins are still sitting at, value prices here. And until we see that money flow down the risk curve, I think we're going to continue to rally. I totally agree.
I want to add two things here. Money will find a way lower on the risk curve. So all the time, money is going to find a way to go to the gambling part of the risk curve. That's human psychology
it's
101.
Human emotion, right? Yeah.
Yes,
I always say that. I always say that when everyone's like, "Where is the money going to come from?" How do you know altcoins or these high beta risk assets going to run? I was like, well, do humans still have the emotions of greed? If the answer is yes, then it will happen, right? Until we're all robots, right? Until Elon puts chips in all our heads and we know how to control our emotions in a way. We're instinctual, emotional people. There's going to continue to be greed. And a lot of the profits, you're seeing the S&P, the NASDAQ been rallying, face-ripping rally for over 2.5 years. You think that all that money is going to be taken off the table and just put into their pockets? No, they're going to take that money, take their profits, and look down the risk curve and look at what's value to extract even more money out of the markets.
100%. And even if it's not going to be a lot of from those profits, a small percentage from the profits from the equities, because of the real money valuations, can pump the fuck out of these ones. And second, because you said something about the models, so I was trading, let's just call it from 2012 until 2020, right? And when COVID crash came, I was shorting the indexes in the United States, and I was just waiting for the circuit breakers to restart, and I was shorting again. But I shorted and I was trading until I saw the future contracts for oil with minus. So I saw oil, okay, the future contracts with delivery, I think it was for April, if I remember correctly, with minus 35. So back then I was like, I took a step back and I was like, everything that I was taught and everything that I knew about finance, about trading, about investing was erased in a second. Because for me, it didn't make any sense to see a real product like is oil being with minus for a few weeks. For a few weeks, they were paying you to store their oil, right? So when that happened, I took a step back and I didn't trade for 2-3 days, and I drew a conclusion. Anything can happen, both to the upside and both to the downside. So people who are not flexible enough and, like Bruce Lee, be like water, my friend, they will be really surprised. Like a lot of people said in the bear market that Bitcoin is never going to drop under 20,000, because that's like, well, it went to almost 14,000 if you remember. Same thing now. People are saying, oh, Bitcoin is not going to rally towards 170. And, this is the cycle top. And, this is the 4-year cycle. Well, why don't you let the price lead? Why don't you let liquidity lead? And whenever we're going to have like a definite top, we're going to have the definite top. So I just pull out the total cap. I just saw an inverse head and shoulders, which most of the time is a bottoming pattern. But here it was a continuation pattern.
So this is, sorry to interrupt. This is total crypto market cap?
Yes, exactly. And we broke out after we reaccumulated. We had an inverse head and shoulders. We broke above the neckline. And I think that now we are in a reaccumulation. So as long as we stay above 3.6 trillion on the total cap, I have no worries, at least on the weekly close. And for me, if people are following me, or as you know me, Louis, I'm following liquidity. So as long as I see this puppy going higher, as long as I see that we have at least $1 billion printed each 2 weeks, I have no worries about the current state of the market, because it means that there are entities around the world, payment providers, family offices, ETF issuers, etc., which send funds like real fiat through Swift to Tether, and Tether is printing digital dollars, and they're printing USDT, and they're sending to these institutions, because it means that them and their clients are having still a big demand for crypto assets. So as long as I see that Tether is still printing at least 1 billion each 2 weeks, or at least 1 billion per month, I have no worries. Plus, on top of that, and I think this is the basic of the basics analysis. This is the money supply of the crypto space. If this goes up with the USDT dominance, so the weight of the dollar, of the digital dollar inside the crypto space going lower and being in a downtrend, I have no worries, even if we have some short-term silliness, right? Plus, I just look at I look at the Bitcoin chart on the weekly time frame, and this is just a thing of beauty.
Yeah, this to me, and this is how I'm looking at it. It's been a nice run, right, for Bitcoin off the lows, but because we've had these multiple time-based, capitulation, 8 months, 3 months, 2 months, 2 months, the curve of this uptrend really hasn't started to steepen yet. But to me, this looks like kind of what we just looked at. I forget what chart it was, or maybe it was the NASDAQ, that runaway breakout type move where, to me, and especially over the last couple of weeks, I've been really kind of expressing this to our guys in the Discord. Bitcoin looks to be setting up for a big breakaway move that's going to surprise a lot of people. Because, we're in an uptrend, we're making higher lows, higher highs. And it seems like we're coming into an area where we should see price and the curve of this uptrend really starting to steepen. And we will kind of see maybe more of a blow off type, or, parabolic type move like we kind of saw in 2017. That's what this looks like to me.
You said something very, very smart there, and I want to add another thing. This looks institutional. So the difference between the last cycle, when we had like that parabolic run immediately, when we saw, immediately retail, and when I say retail, I don't say it in a bad way, because I'm also retail. I see a lot of, pompous accounts say, oh, retail is not here. Motherfucker, you're also retail. We're all retail. Let's just humble down a little bit,
Exactly.
But this chart looks very institutional, in my opinion. And you can see that. You can see that the structures and the runs, like you said, we had periods of rallies followed by periods of consolidations, technical retraces, again, rallies. And the same thing here. Like, why would I be bearish here? Until I don't see Bitcoin under 92,000 on weekly, I'm not going to change to a bearish stance. Even if we drop, let's say, under 106, even if we drop like towards 100, let's just say like this. Between 100 and 192, I'll be neutral, and I'm just going to wait for the market to see what's going to happen. And under 92,000 on a weekly close, I'll call it a day, and I'm going to say, okay, you know what? On the current market structure, it's the start of a bear market. But nothing like that is happening. I have like one indicator when it comes to on-chain indicators, and that's the Puel multiple. The Puel multiple tells us, it's calculated by the daily Bitcoin issued in dollars divided by the 365-day moving average of the daily Bitcoin issued in dollars. And whenever this puppy goes to 2, or from 2 to 4, that's the time when you start DC outing from Bitcoin and aggressively from altcoins. And right now, this indicator is at 1.2. So nowhere near a cycle top. Nowhere near.
Yep. I'm not seeing any sort of distribution or any signals of cycle top here as well. So, and I always like to say the trend is your friend until the end, right?
True.
Until that trend is broken, you got to bet on continued upside. And we're seeing that continue in equities. We're seeing it in gold. We're starting to see it out of the Russell, low cap stocks. Crypto's last on the menu, right? So I think that's a great spot to end it, unless you want to end with this chart right here, and then we're going to wrap it up here.
Yeah, I just want to end with this chart because I know that a lot of the people in the audience have a lot of altcoins, or maybe they're altcoins heavy, their portfolio, which maybe at this part of the cycle they should. Here, I have to admit, I also got a false signal. It was the only time when I said that this might be the start of an alt season. Unfortunately, it was a false break and we went higher. But here, when we lost 60% on Bitcoin dominance on the weekly trend, for me, it was a clear shift in structure. And any type of move that we might have, even a bit higher, as long as it stays under 60%, for me, it's a clear sign that we are at the first or the early innings of a, not necessarily, maybe it's not going to be a full-blown alt season, but big rallies across the high caps,
sustained rallies.
A sustained rally, just call it like that, sustained rally, because the dispersion is so big right now. There are so many altcoins that it's very hard to cover all of them all the time. So all in all, I think that Bitcoin still looks great. We have a lot of liquidity still flowing inside the crypto space. The dollar dominance, the USDT dominance goes lower, Bitcoin dominance goes lower, and I don't see any worrying signs. Like I said, these are my lines in the sand. As long as Bitcoin stays above 92 and Ethereum above 3,600, we're good to go. And any pullback is good for buying after a bounce.
Yeah, no, I agree. I could maybe see a bounce out of Bitcoin dominance if we get that big move out of Bitcoin, which I think would be healthy. Bounce out of Bitcoin dominance, and then that's the final kind of gasp of air. And then ETH and altcoins kind of take that dominance for the next however long it takes, right? You know, in my mind, 3, 6, 9 months makes sense, but whatever the markets are telling me, you know, however long it takes, we'll see how it plays out. But that was a action-packed, alpha-filled video. Thank you so much, Mr. Spread, for coming on. Guys, go follow him. His X handle is down below. Also, don't forget to like and subscribe the video, and check out the links below for DB Discord, EV Terminal, all down there for you guys to check out. Thanks so much, Mr. Spread.
My pleasure, brother.
And we'll definitely have you on again here for another video, probably in a couple of weeks or something like that, if you're down.
Hit me up, brother. Thank you, and thank you to the BB family. Hopefully, we're going to see each other soon on some of the spaces. Bye, Louie. See you next time.
Yeah. Peace.